Hello, everybody. So nice to have you again. Remember, this is season 3 of the CXO podcast by Asia CEO Community and CsuiteXchange. My name is Yamilette. I'm your host for this season, and I'm very, very happy to see you all today. As you know, we have wonderful speakers around the world. Our first podcast was with a speaker in the US, but today we are very fortunate and so happy to have our speaker here in Hong Kong. He's going to be telling us all about the Asia market, and he also wants to tell us more about sustainability, investment, and how to grow our businesses. I would like to introduce to our season 3 podcast our speaker for today, Mr. Chris Chan. He's the director and co-founder at ZB Capital Limited. ZB Capital is an independent principal investment firm providing growth capital and strategic corporate advice to portfolio companies. And over the years, they have been working with numerous regional entrepreneurs, family officers, industrial investors, business operators, as well as professional parties to co-invest in growth strategies, companies, and businesses. So please welcome Mr. Chen here on our online podcast. How are you, Chris?
Good. Great to meet everyone here, and it is a great pleasure to join this podcast. And yeah, we're more than happy to share experiences with other members of the Asia CEO community. And yeah, it's great to be here today.
Thank you for being with us. And as I was saying, I've learned that your company calls themselves as the growth partner for startups in Asia. And I want to start with that. Can you tell us more about your company? How did you start it? How was it an idea that came to you because of an issue, a challenge you were yourself facing or some of your clients before? Tell us more about this background and the mentality of being the growth partner in Asia.
Sure. So a brief background about ourselves. So we started off back in 2012. At that time, we were not doing any investment. Actually, we were doing M&A activities with other listed companies in Hong Kong for a couple of years, just to kickstart our firm to earn some initial capital first. So after a few years, we did have some very successful M&A deals, helping us to earn the first few buckets of gold first. And then starting in 2016, we started investing in startup companies in China, Hong Kong, Taiwan, Canada, and as well as Israel. So we do have investments in Israel. And then starting in 2019, sometime around that year, we started to look into Southeast Asia, or what you call the ASEAN market right now, and we see that great potentials there. Lots of good startups, and they are a little bit different from the rest of the world in the sense that they offer more reasonable pricing than other startups around the world. That's very important for us because at the end of the day, pricing is a major factor in any investment, right? So from our experience, the valuation for startups in China is impressive for the founders, but not attractive for the investors. But in Southeast Asia, is another story. Like the founders are more reasonable on this front in terms of valuation, and they are very hardworking, they are aggressive, and they actually have learned a lot from the founders around the world, like from Silicon Valley, from China, Shenzhen, from Taiwan. They have learned different successful factors from different groups of founders around the world. So we see a very interesting mixture of skills and mentality in the founders from Southeast Asia. So that's our focus for the next few years. Not that we don't invest in China or North America anymore, but we want to focus on the interesting startups, especially tech startups from Southeast Asia. So that's our main focus for the next couple of years. And when you ask like what do we mean by growth partners? So first of all, we are a principal investment firm, so we invest our own monies, so monies from a couple of family offices, and we are not running it like a VC fund. Like most of the time, when you run a VC fund, each fund will have a limited lifespan, right? 5, 7, or 10 years, but sooner or later it's going to come to an end, and then you have to start another fund to do the fund 2, fund 3, and that put pressure on founders because you want exit to pay off your limited partners, right? You to pay your LPs, to distribute monies back to your LPs. So that kind of time pressure actually doesn't work well with a lot of founders because they may not be ready for an exit in 5 to 7 years, but your fund is actually coming to an end. So that's a disalignment of interest. But for us, we don't have a lifespan on any funds. Like we are a very long-term investor, and it's okay if a startup does not have any IPO or M&A at all. If it's a good business and it later on it pays off like a good dividends down the road for another 5 or 10 years, we also welcome that. Like we call those like smart sievers. We like sievers, so that's okay too. So that kind of structure allow us to attract a lot of founders actually, because they we feel that a lot of founders right now are trying to walk away from traditional VCs because those are only like financial investors. They have limited time span, and the worst is like there's no right or wrong, but those VC funds are trying to push you to grow. No matter whether you're ready or not, no matter whether it's the right timing or not, they give you the money. They want you to see 10x growth next year, but not all types of businesses or not all business models are catered for that kind of growth model. So this is our value. We have the time, we have the patience to work with the founders. And actually, besides just money, we put a lot of our time in helping the founders to run their businesses. Like for example, like the founders should be focused on doing BD, sales and marketing, things like that, right? And there are lots of functions for a company in order to keep it running, like financials, right? Financial management. And actually we can help them to do all sorts of financial management work, like it saves the founders a lot of work. And also like after raising the first round or second round, you still need to do fundraising down the road, like maybe another round in 18 months. But all founders know that it's a pain in the ass, it's very time consuming to do fundraising. And they feel that the time should be spent on running the business instead of doing PowerPoint, talking to investors, etc. So we will help our portfolio companies to do all this kind of all this work. We'll do all the fundraising, planning, teasers, IMs, financial projections, financial modeling for the startups, and help them to talk to investors. So that way we save the founders a lot of time, like let them to focus on the work. And at the same time, because of all this kind of work, we have a better understanding of the ongoing status of our portfolio companies. And at the same time, we will filter out, like we have the first hand on seeing the potential investors. We can identify those that we and the founders can work with. Like, there are different kinds of investors out there, right? So not every type of investors will fit in the culture of a particular startup. So if we help the founders to do this part of the work, then we can find those that we like. So, yeah. And another example is sometimes the founders may be very good at R&D, very good product manager or product developer, but maybe he or she is not very good at running a digital campaign, right? Mm-hmm. Right now, everything is digital online. And so we have a team of growth hackers that can help the startups to do all sorts of digital campaigns in the digital world, because it's a very, very specialized skill set. And sometimes the founders or the founding team may not have this kind of skill sets, and it's too time consuming for them to pick up this kind of work. So we might as well, we use our team of growth hackers to help them to do all this. So this is what we mean by growth partners.
Wow, that's a lot, and it's amazing and wonderful. Thank you very much for explaining it so clearly, because I also see that you have three different, how can I say, I don't know, I don't want to say something wrong, but are stages or things that you can do to help your founders, which you quote are the startup part. You just mentioned the digital transformation, also the investment and the service model. I want you to explain to us a little bit more about in detail of each stage. You were just mentioning that you have a team of hackers, you help them to take care of the marketing, their business development. It's just all in one-stop shop. But before you do that, I want to ask this question. You say that perhaps now the startups and the founders are not looking for an exit, which perhaps traditionally this is why some people would start a company. Is this a trend that founders want to stay with their companies for longer and not even thinking about exits, or is just some of the startups?
Well, I would say the founders around the world, they're always the smartest group of the people in the commercial world. Okay, it's just like for example, founders from China, they are very eager to make their startups to go for IPO. For example, that is a very nice exit, and it sounds great. But is this the only way to define an exit? I don't think so. And a lot of founders right now, they don't think IPO is the only way to head to, like because they can go for M&A, they can go for strategic joint venture with other conglomerates, or they can keep on growing it without going into the public market or any kind of capital events. Like look at IKEA, look at Huawei from China. Like those are private companies, but they are doing great. And we do have some portfolio companies that they don't want IPO, but their profits are very close to main board listed companies in Hong Kong already. They don't want public event, but they want strategic investors. So every time when a strategic investor comes in, that will add value to the business. And at the same time, like the original founders can sell a portion of their old shares to this new strategic investors to earn some returns back, right? So this way they procure some sort of monetary exit, but at the same time they maintain control of the company, a very tight control of the company, and they don't have to worry about any like public companies concerns like compliance, all sorts of things. Because if you want to go for IPOs, or if you have become a public company, there are lots of compliance work you have to do. And for example, some of our portfolio companies, they don't need a CFO. They just, for example, they just need a good accounting manager. But when you go for IPO, you need to have a CFO, because the investors or the exchange or the regulators would love to see one, but in reality you don't need one. But then you have to spend, I don't know, like $500,000 to pay for that person. So yeah. To get back to your question, yes, a lot of founders have changed their mind, like they keep their mindset open about exit strategy. So even sometimes they don't even want exit. It's a good business. It's paying off. It's paying good dividends every year. They just want to keep it. And we also enjoy the ride, because we are the investors, right? So we can earn from those dividend payouts too.
So I would say if I may, that you're not only the growth partner of all the startups, you're also helping them disrupt the mindset of how to see their companies and how to see that specific growth. You mentioned perhaps if you don't go IPO, you may not need a CFO. What about a CTO? Because we're talking about innovation and constant change and transformation. And with your example of digital transformation, perhaps teams need a better direction on how to manage positively this change. Would you advise these startups to think about a CTO or someone that could look at the big picture and transformation?
Well, it depends on how you define a CTO, like the purpose of having a CTO. For example, like a lot of the founding team will have a technical person already. Like you can call him CTO or CXO, whatever you want, right? But I would say like don't think too much about whether that's a CTO or not. I would think like whether you need a technical founders or a senior management personnel who has a technical background. That's how I define the team. And what I want to share is we actually don't need, sometimes it all comes down to economies of scale, right? So we do have shared CTOs among the startup companies. So that will save them a lot of money and time, etc.
So again, we go back to, and I'm going to repeat myself, to changing that mindset and thinking in a wider perspective. Going back to my comment on all of the verticals or the steps that your company provides to the startups, from the startup, the digital transformation, and the investment and service model, what do they entail?
Sorry, a little bit choppy there. Can you repeat your question? Sorry.
No problems at all. I was saying, going back to my previous comment on that, you have different verticals of steps in the company that could help the startups, which is the startup portion, the digital transformation, and also the investment with the service model. What do they entail? What are the elements that your company offers in every of these stages?
Yes, I don't really click on this part.
If I'm a startup and perhaps I don't want, because from what I understand, like, I just want you to clarify to our audience that if I'm engaging with you and you're helping my startup to grow in terms of the investment and all of the other elements, is it a whole package that we will see the startup from the overall point of view, and then we will think about the digital transformation, the investment, and the service model? Or can I do it separately depending on the stage of the startup? I want you to clarify to us, what do you mean by these three verticals in your company?
You mean how we like structure different blocks for the startups?
Yes. Correct. Yeah.
Okay, so basically, after we invest, like we will identify there's no perfect startup, right? So we're trying to identify the weaknesses in the startup. Okay, and usually money comes the last. Like they need money, but actually most of the time money is not the biggest concern. The biggest concern is how to bring the company to the next stage by having the right technology, the right people, everything, right? Okay. So because we have our own like internal service companies, we also run our advisory companies, we run our own CPAs, we run our own IT service firm within our own portfolio. So we can allocate the right resources to help them to grow, to tackle those weaknesses and keep on running the company. So I think this is how we differentiate ourselves from other investors too, because most of the time they spend too much time on just doing financial investment, like providing monies, etc. But for us, providing money is just 20% of the game, to be very honest. Yeah, 80% of the game, we actually get our hands dirty. We actually, we get our hands dirty. Like if, for example, if they don't have, let's say they have a manufacturing function and they don't have the ERP system and they don't have the right people to implement that and manage that, I would tell them, don't hire a separate IT manager to do that kind of things. First, it'll burn a lot of your money, and the most precious thing in this world is not money, is time. So I don't want our portfolio companies founders to spend the time on managing this kind of people or non-critical functions. So we will use our own IT service company to recruit the right people and then help them to implement the whole thing.
Okay.
At a fraction of the cost of the big consulting companies.
That's great. That's great. I know our members would love to hear that.
Yeah. So that's a win-win situation, because our IT service company will be able to help them earn the revenues, everything, and at the same time the startups can save a lot of costs. They don't have to bear the cost themselves, and they don't have to spend time managing that.
And as you were saying, because it's all internal, you also have partners and a team that our startups can trust. It's all there. That it's not suddenly going to go away. I want to know, how do you find the startups that you work with in your portfolio? Because I want to quote you literally from what I've been reading about yourself. You say that we are a business investor, and through our investment plus service model, we target at businesses that have sensible business model and sustainable growth potentials. So this last part of your quote, that they have sensible business model and sustainable growth. How do you identify these startups?
First of all, it's all about networking effect, because just like how you get to know friends, like let's get together, right? So we start off in 2016 focusing on this type of startups, like sustainable business model, sensible business model. You when you do this kind of sound out, you will attract this type of founders to come to talk to you. So actually, from the very first step, we make our statement very clear, like what kind of startups we're looking for. Like, for example, a lot of investment firms or investors are chasing the hype. Like they, for example, like a couple of years ago, everything is big data. 2 years ago, everything is AI ML, and now everything is NFT, right? So the founders or the investors, with all due respect, sometimes they like to follow the trend. Okay, but for us, we never change. Like, we keep on focusing on the fundamentals of the business. Like, maybe you pull up the wordings AI, ML, or NFT may help you to attract the investors to give you money, something like that. But if you don't have a sensible business model to monetize on your strategies, 2 years from now you're going to fail. Yeah. And we don't want that. We don't want that. We want something that's sustainable. So again, like simple is beauty, right? So sometimes we don't go for some very complex, fancy business models. We would rather go for some solid, simple things that we can understand. That's and after a couple of years of investments in startups, we have gathered a group of portfolio companies and startup founders who share this same sentiment, the same philosophy. And then they will talk to their friends. They will talk to their own communities. They will talk to their other startup friends. That's how we get to know more of this type of startups.
Okay. Yeah. All about networking And again, being part of this community, Asia CEO community, I'm sure it's great for those startups to know about your philosophy and your way of thinking, and for you to get to know the startups. And I also know that you have this platform, ZB Connect, where you have networking events, you have all this. Is it twice a week that you connect with startups and ask them for their ideas and their point of view? How did you decide to start this ZB Connect? Because for me, it sounds very interesting, and also very kind of you to give your time to the startups to connect with you directly.
Yeah, we have that idea because we want to meet more people from around the world, but in particular, founders, startups, or founders from Southeast Asia. We want to meet them, and it's an open session. If you sign up for ZB.connect sessions, it's an open session. You can share whatever you want, or you can ask whatever questions you want, and we will try our best to address the questions from those founders. And sometimes it's for free actually, because sometimes like a lot of advisors or advisory firms will charge for advisors, but for us, like right now there's no information asymmetry and not much knowledge asymmetry. You can learn everything from Google, right? So we're just trying we're trying to like summarize all this knowledge and based on our own experience, and then consolidate all this knowledge, and then hope we can help the founders. Even if it's not a startup that we're interested in, as long as the founders sign up for this session and have some questions, we will do our best to share our experience. Not like I don't really like to use the word answer the questions, because we are no expertise. We're just trying to share our experiences, and hope our experience can help them to address their concerns or their problems. So yeah, that's the main idea behind the ZB.connect sessions.
That's great. And I'm sure that that's also one of the things that makes you different and gives you a value proposition to the startups and the people that connect with you. I want to go last question. I know we can stay here forever, but also you've been very kind to give us your time. So what comes next? What happens in the future now for yourself and the company, with all the changes and transition that we have been going through in the global scale? So what would you see as the future? Or is there anything you would like to tell our startups that they need to be thinking about for the next few years?
First of all, for ourselves, we will keep on expanding. Actually, we are also like a startup. We always keep growing, keep thinking about new ideas on how to run our investment business. So we are also like founders and startups. So for the next couple of years, we're going to build up a new ecosystem in Southeast Asia, because we like the startups there, we like the founders there, we like the multicultural environment there, and we find that ecosystem very attractive there, and we're going to build our own ecosystem there. So we're going to copy our model to that part of the world, investment, servicing them, and then growing with them. So this is what we're trying to do for the next couple of years. And then for the founders, I think the market is going to be volatile, not just the stock market. For the last 7 to 8 years, we see a tremendous supply of dry powder in the market, and a lot of accelerators. As long as you have a good PowerPoint, they are going to give you some money. Okay, of course, it's not cheap. They would take a huge chunk of your shareholding from you. But I think going forward for the next 2 to 3 years, the funding environment will be a lot more difficult, to be honest. We see that a lot of investors, or the VC investors, have become more prudent starting like a couple of months ago. So we see that in China, we see that in Hong Kong, we see that in the States. So I think it's also going to happen for the startup environment in Southeast Asia too. It will be it will be more and more difficult to get funding for the next 2 to 3 years. So the founders need to, when they think about the growth path of the startup, I think first they have to be more prudent in managing the cash flow of the startup, because if the general investment environment will become tougher, then your fundraising plan may not succeed. And if your runway is so short, like 6 to 12 months, then you are in a very, very bad situation if you run out of cash, right? So
Yeah.
I would say like the founders have to bear in mind that they have to keep their runway for at least 18 months healthy, like in order to stay healthy, because like like I said, it's not going to get money down the road. And if you have a fundraising plan, I'll say like always have a plan B and plan C, because when we meet a lot of founders, they sometimes they can be very stubborn. I want this kind of valuation. I want this type of investors. I want to close this fundraising round in 4 months, etc. That's my plan. Okay, then I'll ask them, what's your plan B? Like what if like people don't like your valuation? What if people don't understand your business model yet? What if there's another serious outbreak of another virus down the road, right?
Yeah.
A lot of things can happen that can disrupt your fundraising plan. So if you don't have a plan B and you just have a plan A, and then I'll say it can be very, very, very risky. So right now when we advise the startups, we'll say like first of all, you need to have at least 18 months of runway, and then always have a plan B or plan C fundraising plan.
That's great. Thank you very much. And indeed, being more strategic, but also being agile and flexible to change, because the world, this is what we've been living in the past 2 years, that we just need to be flexible and open and connect with the experts like yourself and ZB Capital that can help you with that journey. Thank you very much for your time, Chris. It was been amazing. Remember, we have our season 3 of the podcast, more speakers later on through this season. And if you want to connect, once again, please do so through Asia CEO community. Gary, he's always there at the front and back to help us. And directly, I'm sure they can find you on your website, LinkedIn. Please connect. And I'm sure that as you've been very, very kind to give your time now, you will do so with other startups if they want to connect. Thank you very much for being here. And I hope you have a great rest of your week and pre-Chinese New Year. Con hei Fat Choi.
Thank you.
Bye-bye.
Bye-bye.